Dear learners, from the previous videos, I hope you understand the evolution of tax in the world. Now, moving to the history and background of income tax in India. The present system of taxation is based on ancient tax system and the references of various tax measures can be traced both in Manu Smriti and Arthashastra. Manu, the ancient sage and the lawgiver, posed a calculated tax system and recommended that traders and artisans should pay 1/6, 1/8, and 1/10 of their produce as tax depending upon their situation. Apart from this, taxes were also collected from actors, dancers, singers, and even dancing girls and were paid in the form of gold coins, cattle, grains, raw materials, and also by rendering personal services. However, Kautilya Arthashastra deals with a planned taxation system, the Mauryan system, which shows a kind of state landlordism used to collect taxes not only on agricultural produce but also on water rate, octroi duties, tolls, custom duties, forest produce, and mining of metals. At that time, salt tax was also levied on and it was collected where salt extraction was done. Now, in 1860, Sir James Wilson, pre-independence finance minister, introduced income tax for the first time in India to mete out the losses incurred on account of military mutiny of 1857. In this, income was segregated in 4 schedules, that is, income from landed property, income from professions and trades, income from securities, and income from salaries and pension, and they were taxed separately. With the passage of time, this act was taken over by various license taxes. In 1886, a separate Income Tax Act was passed and income was divided into salaries, pension or gratuities, net profit of companies, interest on securities of Government of India and other sources of income. In 1918, a new income tax was passed wherein various important changes were incorporated. In 1922, a new act was passed which gave specific nomenclature to various income tax authorities. This act was in force until 1961, but due to innumerable amendments, it became very complicated. So, in 1961, after consulting Ministry of Law, Income Tax Act 1961 was passed, which applied to the whole of India, including Jammu and Kashmir. In this act, income was divided in 5 heads: income from salaries, income from house property, income from gains and profit from business and profession, income from capital gains, and income from other sources. Since 1962, several amendments of far-reaching nature have been made in the Income Tax Act by the Union Budget every year. Hope you all are enjoying while learning about history of taxation in India. In next video, we will study about the meaning of tax, what are the different kind of taxes in India, and what are the different type of direct taxes which are applied in India. So that is all for this video. Thank you for your patience listening.